What's up everyone, welcome to the video of how to trade with the Spike and Strike from BlueDigitsFx. And I do not have it on here, so let me just take the Euro USD. And we're going down to the market and we're going to download the Spike and Strike reversal demo. I'll just give it a second because when you click the market it takes a lot of time to load usually. Alright, let's drag that up and we're gonna search for blue digits. Okay, and we're gonna get the Spike and Strike reversal demo. We're just gonna simply click download and it's going into our market tab underneath the indicator. So actually it's in Navigator, Control N, and you have an indicators folder which has a market folder. Your indicators will always appear there, the ones that you buy from MQ05. So we have the Spike and Strike right here, and let's show it. This is the default load settings. If you guys wish to use Bollinger Bands or the volatility bands, then you just put this setting to true and they're gonna show it too. But for me it's enough to just see the spike values and when they spike the extremes, such as in this case. But we always do our multiple confirmations before we decide to take a trade. And as you can see, this is a nice continuation trade of a trend. So let's dive into it, how you guys can use it. So I'm gonna put the process bars up a little bit so I can go deeper into the past and show you guys. Okay, so I recommend everyone to not use this indicator as a standalone indicator. Why? Because the peak values, and let me explain this very well, is, for example, when this peak spikes underneath the 10, okay, and the price then goes up and this low would spike down, then this spike would exceed this spike's value, and this might be a plus 10 and this one's gonna go recalculate into a plus 6. Now this doesn't affect your live trading if you use the indicator correctly. As you can see, you can also draw trends on the indicator itself. But yeah, that's just something I really wanted to mention right there. Now let's dive into the strategy, how to use this. So as I've also shown in the 1, 2, 3 video, you want to put up a trend moving average, and we're going to make that a 50 exponential apply to close. And I like to use a aqua color because in previous teachings I've always learned to put this as the aqua. So it's nice for me to remember which one that is, of course. So let me put the auto scroll off. Let's go to the extreme low of this current chart. So I like to look at the 4 hours and the 1 hour chart. We're actually spiking the extreme right now. But this is what I want to say. This is actually a very good exit point because we're spiking an extreme value and we're also at a area of significance, so this is nice. So in this example we would have taken a buy here and we would consider a take profit at this level or at this previous high. Okay, and how do you confirm this with the Spike and Strike? Okay, let's dive into it. So as you can see, market is going sideways right here, and then we get a spike. This was a plus 6 or a negative 6, and this was a negative 10. But in this case, you can see that the market is going down and then it's spiking. So this first one, you do not want to trade it until it goes up, and then you want to take the continuation of the sell right here because the market is heavily pushing down. So as soon as this spikes above the 10 value, we're preparing. So we want to see some specific type of price action or some kind of action of rejection. So as you can see here, we have a head and shoulders pattern, and if we would draw a line over that, you can see that when the market broke downwards, they retested this level, came down, boom, up, and here we get a spike signal. So it's a very clear signal to go short or sell, in other words. And how do we confirm this with a spike? So you do not want to enter directly. You can, but it's more riskier. If you know that you're at some previous resistance and it's spiking at the extreme at that exact point, then it's definitely okay to take that trade, but I would always consider to wait for your confirmation. So as you can see down below, you can see that when the red line has crossed the green line, and I'm gonna add alerts to this later on, guys. When the red line crosses the green line and then the candle closes, so at this candle we started crossing, and most likely the cross and the close would have been clear on either this candle or this candle. Let me zoom in on that if I can. All right, and that would have been this candle, right? Or it could have been this candle. Then it's totally fine to go short. Okay, so we go for a sell position here. As you can see, we have previous structure at this level, so this is considered our first take profit level. So let's draw a box here really quick, and then I can show you guys a nice example of risk reward. So on this candle close, we would have gotten in. We would put a stop above this previous structure level, which would be, can I see? Oh, give me a second, guys. Show object descriptions. So as I'm drawing it, you can see the pip value or the points. This is a 130 pip stop loss. But keep in mind, this is the 4-hour chart. 100 pip stop loss, and to target this level, we can see that that is 1, 2, 3. So nearly a 1 to 3 risk reward on a confirmed setup from the spike and strike. All right. All right. Let me see if I can delete all, select all. No. Okay. So let's look at another example. So why can you also use the 50 EMA? So as you can see, the price rejected off of the 50 EMA. Now it's usually going to do that, but you can see a micro type of head and shoulders pattern here as well. So it's always very beneficial for you guys to use your price action knowledge and confirm it with the spike and strike. Now either that is support and resistance, patterns, pivots, trend lines, all of that stuff, okay? Okay, let's look at another example right now on the AUD USD. This one is for free for you guys as well. So let's take a look. 4-hour chart, let's say. Okay, this is nice, this is nice, this is nice. So as you guys can see, since the second week of March, we've started a upwards trend. So as we're going, and we can look by the slope of the moving average, that it's sloping upwards right here, so you can tell that it's trending up. Every time you will get a spike, now it's not always going to show you the arrows, because the calculation is very, very tough. Give me a moment. That's why I don't prefer to use the alerts. But once I add the crossing alerts, this is going to be a lot nicer for you guys. So you can expect that. So here's another example how you can use the spike and strike to trade in a trending market, for example, or to trade your reversal. So here you can see we get a spike. So what we're going to do is we're going to look to the left, but we do not see like any type of previous structure. Or let's zoom out even more. Like I don't see anything in the recent past, so I'm not gonna go look here. So I'm just gonna let the markets do its thing. But as soon as I see this W form, for example, this is a known pattern, I kind of know that the market is preparing to reverse. So you do not have to trade this. You can just let it form, continue. And then you can see it starts to range a bit, and then we have a breakout, and it's starting to form a nice trending market. So we're going to look for buy signals only, and you can see that the spike and strike, every time it spikes below, let me turn the Bollinger Bands off really quick. Every time it spikes below the -10, it's a strong reversal signal. So we're going to wait here as soon as this is formed. We're already preparing right here at this point. And then we're going to look to the left and look for that type of structure. So as you can see, this is a nice area of structure. Markets came down below it, probably took out some stop losses, and then it went up with a nice 1, 2, 3 pattern and a bullish engulfing. And we have a close above the 50 moving average, which is another very strong signal. So there's multiple confirmations here. And what you want to look for on the spike and strike is you want to look at the red line. Now let me make this a little thicker for you guys. Oh my god. One moment. So as you can see, you want to look for that candle close, and you want to see the red line be above the green line. So here you can enter your buy signal at this candle. Boom. Perfect confirmation. We close above the 50 EMA. We see this confirmation. We're starting the trend upwards. So yeah, this will be your entry signal. You can target this previous high. Now note this is a 4-hour chart. So this tiny little move is 150 pips already. So you can target that high and get an easy 1-to-1 risk reward, I bet. Even more, 1-to-5 risk reward, because you would be risking about 100 pips or maybe 120. You would get an easy 1-to-1. And you can follow the trend direction and exit on a cross, for example, to always secure your profits, of course. So as we're going, we get the same scenario. We spike, we see we're forming a nice double bottom, and then we look, we see the price close above the 50 EMA, the red line is above the green line, and we go long again, and we target the previous high. So 110 pips got smashed easily with 100 pip stop loss. Not too shabby, not too bad, but you could also could have taken your 250 pips, but I recommended take your exits on previous structures to always secure your profits consistently. Okay, and then same scenarios, closes. If you have put the stop below this, you would hit this high easily. Same scenario here, so this could be a second entry. Boom, hit the high easily. Coming down. Now look at this. We're spiking below the -10, but the price came up but never closed above the 50 moving average. It's rejecting off of the 50 moving average, so you do not want to enter this one. It's not always going to be perfect, so keep that in mind. So as soon as the second leg forms, which is also known as a W, and we can see it format some structure if you look to the left, then as soon as the candle closes above the 50 EMA, you can go long, target previous highs, 90 pips, and I got hit in 1, 2, 3, 4, 5 candles, guys. Come on, you don't have to make it hard on yourself. This is our easy 1-to-1 risk reward ratio targets on a H4 chart, and you can do this on the H1 as well. All right, so if you put your stop, you might have gotten tapped out on this one, but if you follow the rules and you waited for the candle close above the 50 EMA, then you enter here, put the stops here, 48 pips, target a previous high, or here, this is a little low, 25, so I would target this one. I got my 1-to-1 risk reward, and then boom, next day I got hit easily. All right, so that's pretty much it for the spike and strike video. If you guys have any questions, make sure to DM me at BlueDigitsFx on Telegram, or you can always hit me up on the official marketplace MQL5, where you can find my products. And yeah, guys, I'm wishing you all blue digits, and as soon as you make a purchase, make sure to reach out to me so I can add you to the VIP group on Telegram. Now let's get it.